Recap for March 26th. Today was significant. Coming into the pre-market, I was into the idea that there would be a pullback, but it became significantly worse than I expected. I thought on the lower end of probabilities, on the lower end of outcomes, that we would retest the lows from Monday, and then we might get a trap. Now, headline completely threw that off. Trump took that and threw it in the bin. I did try and some spy calls at that, but it was so stagnant and so slow. And I'm on vacation. I don't want to sit here for too long and stare at this. I'm trying to enjoy more time just relaxing, enjoying the weather, enjoying the country and the woods where we want to walk and spend time with family. But that would have been, when that failed and that broke, that Monday's lows, that would have been a short opportunity. Now, I did have automated stops while I was gone. So when I came back, I was actually pretty shocked to see that those stops actually got triggered. We'll see. I might want to actually reset those if we can bounce here. I wonder, can I flip my camera? Doesn't look like I can flip my camera with my phone. So I'll post this here. I'll post this in the public chat, the SPY charts that I'm discussing right now. Here. We have this parallel channel clearly, and you want to see us hold that. Given that the weakness here is already much more than I would have expected. So if this continues to ramp up, it gets out of control. And, if we break that parallel channel, we're going to new lows. It's going to get really ugly really fast and destroy the bounce narrative. I don't think that's likely. I think that, this tariff news on auto tariffs, I feel like if other countries were anticipating this to be a realistic outcome, we'd be hearing more, we'd be seeing headlines and comments from them, and we're not. And so, that's why I was so kind of fine with being lackadaisical over the management of my more bullish positions, because what I keep seeing in the headlines, or at least what I'm focused on, was kind of the expedition of the tax cuts. Trump was trying to push those out as fast as possible, likely trying to provide some support to the market. Much sooner than I expected. When we did our yearly projection, we didn't expect those to come out until next year. I think that could lead to a lull in the selling, which before we get the selling later in the year. However, today kind of caught with the pants down and more aggressive selling than expected. It's still not panic selling by any means. This looks like slow, controlled selling, which again is, in a bear market, is pretty normal. It's not like a sign of capitulation or of panic quite yet. But it looks like one of the things I'm thinking about right now is maybe I am underestimating the fact that foreign countries are doing these more fiscal plans. They're printing money. China's printing money. Europe is printing money. And the U.S. is doing this, what would you call it? A detox phase, right? They're trying to get rid of the excess spending. And, you could have whatever opinion on the political efficacy of them or how that's going. It doesn't matter, right? What matters is the environments that these are creating for investing. Where would you want to put your money in the country that's printing money right now, trying to pump their markets? Or do you want to keep your money in the country that's trying to detox, right? So I could be underestimating the effects of that. In my opinion, American exceptionalism is still alive. I mean, more than ever, I feel like it's more of a dying empire. Not going to lie. It feels like that more than ever, especially with just from the social aspects, from the fourth turning aspect, just from the way that gold is reacting. The other thing, gold, someone asked about gold, buying gold puts. There's just no way. I can't bring myself to do it. Every time I look at the chart, it still looks crazy bullish to me. And again, like if the market's just in controlled selling phase and not in a panic selling or in crash territory, gold can continue to run against it. If there is going to be a crash, gold will probably be the sturdiest. It'll probably be the first thing you want to buy after the crash, depending on what the geopolitical environment looks like, right? There's a lot of noise and turmoil to unravel there before the gold bullish thesis falls apart. So even if there is like a big crash, like miners will still probably be really appealing. And at that point, something like AV, UV could also become appealing because of the rate cuts that will probably precede that. It's all like later in the year, right? We're very far from that. I just want to make sure that I'm always constantly resetting the backdrop. Same thing with us getting like long here. I want to constantly remind you that my expectation is fully 100% lower lows and potentially significantly lower lows, like full-blown market crash later in the year due to this detoxing. So the tax cuts, though, could be bullish in the short term. They're trying to push them out on Memorial Day. Remember, that's going to be May 26th. So you've got potential headwinds, significantly potentially headwinds until that event. But it looks like there's a bunch of political noise in there, whether or not it will happen or won't happen. Is it really something I want to like pay close attention to? No, but I might be forced to, given all the noise that we got today, right? Bull markets typically do a better job of climbing over news like that. And when you look at this, it's not yet by definition a bear market, but it is definitely like after today, after the coming out of noise last week, you would want to see this be a lot stronger than it was today. So it's definitely acting like a bear market, really weak, really, really, really weak. So now we have I got stopped out of some of those swing positions. I still have some I still have Oklo up. I didn't have Oklo automatically stopped. I get stopped out of some of my Google. I didn't get stopped out of my coin. I still have some Oklo up, and I still have the April calls for SPY up, which are got beaten. But those might be fine. Oklo might be fine. I see that it's actually still, although it had a sell day, it still has great relative strength against the market. The 15-minute chart looks pretty good here. 65 could reverse here. It looks okay. 4-hour looks really rough. So this needs to turn tomorrow. That 4 hour is going to drag this lower. And the daily's turning over. See, but that's the tough thing about this one is that it's hard to find a catalyst that would really drive these technicals to play out. And that failure to hold and close above 118 might have been the death blow. I need this tomorrow to make a reaction, or I'm gonna be forced to cut it, which is a bummer because it still looks like a good technical setup, but that 4 hour is about to fall apart there. It does look like the 65-minute can turn, so we'll give it one more day. We'll give it one more day and see what it can do. I don't like to overreact to swings, and normally I might have even held the ones that got stopped, but I'm on vacation, so I'm out and about doing stuff. So far in the after hours, the reaction looks good. Google actually looks fairly decent. Bit bummed that got stopped because this actually looks pretty good. Yeah, 65 minutes still looks good too. You're still over the 633. Yeah, I mean, this still looks pretty decent. Let me go ahead and share this one in the public chat because it looks like we could be on the 65-minute creating a bullish divergence if it can. Maybe get gap down tomorrow and then reverse out of the hole, do like a give and go in the morning to be really great. I'll post this one as well in the public chat so everyone can see what I'm looking at. And yeah, so I just wanted to do a quick video to just recognize that, yeah, the market's changed a lot differently. We're going to have to play a lot differently, be less aggressive here, because we were kind of in easy mode at the beginning of this week, right? Caught some great plays in the morning on Monday and Tuesday. And now, and by the way, this still could trap it. But the likelihood is way lower than it was at the Monday. What you would want to see is that it traps the Monday lows, gives a rally, pushes to new highs, and then has a more significant sell-off. And it probably would have done that. Price action looked like it wanted to do that, and then Trump opened his dumb mouth, and the headlines smacked it back down. It's what I'm looking at in hindsight. Obviously, I wasn't here staring at it all day. Which is a bummer, because when it gives out those lows like that, the weekly lows, pretty rare. When the market's in a bounce phase, it actually retraces below the weekly lows. And that is like definitely a very easy short to take. But I kind of got impatient with the stagnant price action, closed the position, looked at it and thought it probably plays out, but it probably takes another hour. And I would just rather go hang out or take a nap, or, I'm on vacation, right? So I'm only trying to trade like in the first hour and a half. So I'm just kind of rambling at this point, but that's what I'm looking for, guys. If you have any questions, definitely DM me, send me a message. I'll be around. I imagine there's a lot of uncertainty right now. Not going to be doing classes while I'm on vacation this week, but I am present. If you DM me, if you add me, I will respond. Per usual. So I hope you all having a good week. I wouldn't say it's doomsday yet, but it is. The market did just today become significantly harder to trade than it was at the beginning of this week. So we'll see how the rest of the week pans out from here. And I think we'll be looking for that like give and go, maybe a gap down, and then a nice move up is what you want to see, or the selling can accelerate. All right. Y'all have a great rest of your day. Enjoy your evenings. I'll see you in the morning.